Welcome to Real Estate in Real Time. I'm Woody Zimmerman here with Mark Skabowski of Remax Lakes. Welcome to the show.
Here we are. Good morning.
Good morning. And hey, we're going to talk about what it takes to get into a property, saving, and a lot of good stuff that we've been talking off the air about.
We had a lively discussion off of the air.
Stock markets and stocks and
trying to save for buying a home.
Yes.
Right? And really what we're talking about, and we did a show a couple of weeks ago about, owning a home, what's it do for you as far as increasing your net worth.
Yeah. It's a great investment.
It's an investment, but it's something we all have to have.
Yeah.
And that's why, in fact, it is such a good investment.
Mm-hmm.
The home ownership matters. It truly does. So, if you run numbers over time, people that have homeowners in general, their net worths are a little bit higher than what those who do not.
Yeah.
Part of the reason for that is they're gaining equity based on their investment just over time. Have there been hiccups? Yes, there have.
Yeah.
Just like we were talking about Bitcoin.
Yeah,
right?
You're right.
I mean, that's our biggie on Bitcoin. It's
Yeah.
all over the map. I mean, I remember a couple of years ago, it was at 30,000. Then it went up to 65. Might even gone higher than that. Then it hung at 30 for a long time. Now it's back at 40. Now it's over 50 again.
Yeah, just hit 50.
So now the talk is happening. Hey, Bitcoin's where to be.
Yeah.
For an old guy like me, that's just too risky.
Mm-hmm.
But you know what? Real estate. Something that's going to be here, that brick and mortar, it's going to be around. People are always going to need a place to live.
Yeah, real estate always wins. It's a solid investment.
I believe it's a solid investment. And every market's different. That's a disclaimer, right? Every market's different, depending on when you buy, all of that stuff. It's all going to impact. But the show today is really about, how do I buy? What kind of money do I need to buy?
Mm-hmm.
And there's still the same preconceived notion out there that you need to have 20% down in order to buy a home, and that is just not true. There are plenty of financial programs out there for people to use to buy without having 20% down.
Mm-hmm.
Now, is it better to have 20% down? Absolutely.
Sure.
Than to have less money down. But, what you're giving up by not doing some of those other programs, some of the lower down payment programs,
mm-hmm.
is you're giving up the gain in equity that those houses would make. And let's look at, 21, 22. Those are extreme examples where, we saw 15 and 20% price appreciation year over year.
Right.
If you bought in 19, or at the start of 20, you were sitting pretty well at the end of 22 with price appreciation, right? You might have bought it for 150. All of a sudden today, if you were to go and sell it, now you didn't have, but if you did sell it, it was probably 190.
Yeah.
Right? I mean, that's a significant amount of wealth.
Yeah.
It's equity because you haven't sold it yet in your home, but you've gained much more than 5% interest in a savings account, which we weren't getting forever, because remember, when interest rates were at 3%, you were getting 0% interest in your savings account. So that's where, giving up a little bit to get a long-term gain is important. Short-term pain, long-term gain.
Yeah.
So, but how do you purchase a house? How much money do you need to buy it? Well, there are 0% down programs. There's VA. There's USDA.
Yeah.
Those, again, there are income requirements for the USDA. There's limitations on USDA.
Right.
VA, the fact that you served your country, honorably discharged, you have the opportunity to have a VA-backed loan.
Okay.
Which is basically the government is supporting your loan. If by chance you were to default, the government will pay that off. So, not the only way to buy, but it is. You can buy a home with no down payment.
Yeah.
So, but if you are going to buy one and you want to have a down payment, save for it. Because you're going to need money in order to buy. We've talked about it at length over the years on the show.
Oh, yeah.
You need money for earnest money. Typically 1% of the purchase price. So these are the dollars that you need to get into a home. 1% for earnest money is a good amount to consider for earnest funds. What are earnest funds? It's where once you get an accepted offer, you have to write that check, do the wire transfer, money order, whatever, it says you're earnestly interested in buying the property. So if you're buying a $200,000 home, 1%, $2,000
$2,000, right?
Pretty easy to do the math, right? So you need 1% for that. Closing costs are the cost of the lender in order to make the loan. So that is the appraisal, credit reports, underwriting fees, all this stuff gets bundled into those closing costs. And in our market, that's usually between $3,000 to $5,000. Now, nationally, they say 2 to 5%. At 5% on a $1 million house, I don't think your closing costs are going to be that much.
Right.
Even 5% on a $200,000 house is extreme, in my opinion, based on my experience. So, figure you got to have a couple of thousand for earnest, 4 to 5 for closing costs, and then whatever money you're going to spend for inspections, which can be as much as depends on what you have inspected, but a whole house is about $500 to $600. Pest inspections, all of those things. So bundle all that up. It's a big number, right? Hey, oh my gosh, I got to have $7,500. That's just closing costs. And the other part of that is your earnest money is deducted from that total number. So if it comes up that you need $7,500, earnest money makes up some of that. Your closing costs there. At no point did we talk about down payment, right? In that number. That $5,000 to $7,500, $5,000 to $7,500. That's none of it is down payment.
Right.
That's closing costs.
Yeah.
And after the break, we'll talk a little bit more about the dollars you need for purchasing a home.
Okay, you're listening to Real Estate in Real Time. We'll be right back. Welcome back. You're listening to Real Estate in Real Time. I'm Woody Zimmerman here with Mark Skabowski, and we're talking about the money that you need to purchase a home.
Yeah, so earnest money is part of that. You're going to have closing costs. You're going to pay for inspections. A lot of that money comes up front, right? I mean, it isn't like, hey, it's going to be included in your loan. So, and the money we just talked about, you get an accepted offer, you're going to write a check for earnest money. It's going to get deposited. It's going to be withdrawn from your account. Right. It's going to be gone. Closing costs, it's going to be taken out at closing. So on the settlement statement, which is the document that you get when you get to closing, both buyer and seller sign, it's got all the debits and credits, the costs, and any credits that you have related to closing are on that. So you're going to need to have those funds, and your bank's going to want to verify where the money came from. Right. Now, some of those can come from gift funds. You can receive gifts, again, depending on the type of loan. That's where you need to really talk to your loan officer. Hey, this is what I'd like to do. I need this much. Here's where I'm going to get it from. Will that work? Gift letters aren't that, intensive. It's not like you're writing a novel. It's, hey, I'm giving this money to my son, daughter, nephew, niece, whatever. Right. Here, I'm giving them the money. Basically, they want to make sure it's not another loan. Yeah, right. So where you don't have to pay it back. Yep. So both parties are saying it's a gift. It doesn't have to be paid back. So we talked about earnest funds, closing costs, down payment. How do we save for that? You got to be consistent somehow, some way, because at no point did we talk of those other costs. We still have down payment. There are, 0% down. There's 1% down conventionals. There's 3% down, although I haven't seen many of them lately. There's 3% down conventional, 5%. There's FHA, 3.5%. What am I telling folks? Talk to a lender. Yeah. There's a lot of options.
There are options. You mentioned USDA loans. Right. I mean, that's been around since like the 60s, I believe.
I don't know how. I know it's been around the entire time I've been in the business, although it wasn't that prevalent until probably about 2008, 2009. Oh, really? So after the crash that I started seeing more. Okay, yeah. Now, again, I only got in the business in 2004, 2005. So I don't know what happened prior to that, but USDA became prevalent. There were plenty of other programs out there. There was a program called Genesis, which at the time, it led to part of the crash. It quite honestly did. Oh, did it? Okay. Because you could get a loan you could finance the closing costs in. So you're getting more money than what the house was worth. It wasn't a good plan. Yeah. USDA is a good program.
Yeah, so... Well, I'm just thinking back to when I first was looking for a home, and I didn't have much money.
Yeah.
I was 23, 24 years
Yeah.
old or whatever. And so I was looking to buy a home. And basically, my mortgage originator said, "Well, you're basically qualified for USDA and FHA."
Okay.
And so there were two options
Two
right there
options,
where
right.
I didn't need. It was either zero down or it was like 3.5% down.
Right.
And so it made it like, wow, okay, I can actually do this.
Sure. Well, and that's, I guess, the whole point. These numbers sound daunting.
Mm-hmm.
You know, if you don't have $1,000 in the bank, now how in the heck am I going to come up with $7,000 to buy a house?
Right. Yeah.
There are ways we
Mm-hmm.
we have the opportunity to do that. Now, obviously, your credit score is important.
Mm-hmm.
Cash flow, work history, all of that stuff is very important. But the biggest piece is pre-approval.
Yeah.
Pre-approval. If you're thinking about buying a home, you know, and you've listened to this show and said, "Oh my God, Mark talked these big numbers and blah blah," talk to a loan officer. They can guide you through that process and pre-approve you for a loan.
Right.
They can pre-approve you, which tells you not only how much you can afford to buy. Now, you don't have to spend it. You may be approved for more, pre-approved for more than what you really want to spend.
Right. Right.
But they'll also tell you the type of loan program you qualify for.
Mm-hmm.
And why is that important? Because some programs, USDA, FHA, you know, I get a lot of people, I want to buy a foreclosure, and we're starting to see a few more, not many, but we're seeing a few more. Foreclosures in general, if they're not in good shape, they won't qualify for those types of finances.
Mm-hmm.
But unfortunately, those are the ones that are typically priced a little lower. So, you know,
Right.
if you're qualified for 120, you're looking at something that's on the market at 70. Quite honestly, in Kosciuszko County, to find something livable in a 3-bedroom house, you're not going to get it at 70,000.
No.
If it's too good to be true,
It is.
it
Yeah.
probably is
Yeah.
not real.
Yeah.
It is probably not real. You'll see, you know, stuff pop up. You know, you got a 5-bedroom house on 10 acres for 100,000. Really?
Mm-hmm.
Really?
Yeah.
It's not going to happen. It's not legit. There's scammers out there. Pay attention to that. It's that bait and switch, right? I want to get you in here, so I've got my claws in you, and I'll sell you something.
Right. Right.
Definitely not the best option. But bottom line, if you're consistent with savings, keep your credit score, you know, monitor your credit score, keep it on track,
Mm-hmm.
work with a lender, work with an agent. We can ultimately find you a home if that's your long-term objective, is to get into a property. It can be shorter-term objective,
Yeah.
and maybe we have to slice and dice it a little different. But the opportunities for home ownership are still out there and available to just about everybody.
It truly will change your financial situation if you do
Yes,
it right.
it can.
It will change it. So,
Yeah.
if you want to continue this conversation with Mark, make sure you reach out. Your contact information.
Sure, the website, skabowskiteam.com. Phone number is 574-527-0660. Can always email me if you got any questions. Mark at skabowskiteam.com.
All right, very good. You've been listening to Real Estate in Real Time. Have yourself a wonderful weekend.